All right, welcome back to the second video in the series where we're talking about what do we do in our account after assignment. So from last time, just a quick recap from last time where we started off by selling a put option. We see we have the obligation to buy 100 shares at $10. And then the stock dropped and we started to lose $50 on the trade. And then ultimately, on expiration day, the shares closed under $10. $9 is what we put in here. So we were assigned the 100 shares. And these were the balances of our account after that. We had an account net liquidation value of $99.50, a cash value of $9,050, and we had the 100 shares. Okay, so now we're going to talk about after assignment, what are some of the things that we can do? And in this video, we're going to focus on selling a call option. So one of the things that we can do once we have 100 shares is we can go and sell a call option on those shares to bring in more option premium. So here in the spreadsheet, we see I just copied down our starting values of $99.50 and $9,050. And then hypothetically, to keep the math easy, we're going to say that we sell the $10 strike call option for $50. And so just like above, we'll see that we bring in the $50 in our net liquidation value because we brought in $50 in cash. And we also have the call option now that we're short in the account, one call option, and that has a value of $50. So that we're not making money or losing money as soon as we open the trade, the value of the call option would not have changed. And so right after we sell the option, really nothing changes in the account. We still have a net liquidation value of $99.50. It could be because if we closed that call option right now, we would pay $50 to close it. And but we brought in $50, so we now have $9,100 in cash. Okay, not a lot changed. Okay, so now let's look at the two possible scenarios. So now we've sold the call option, and there are basically two things that can happen from here. First, the stock continues to trade around $9 or just stays under $10 as of expiration, then that option will expire worthless and we'll keep the $50. The second thing that can happen is that the stock trades over that $10 strike price and goes in the money. And when it goes in the money, it's in the money on expiration, then those shares will get called away at the $10 strike price. So again, doing this exercise, we look at after assignment, the option expires worthless. What happens to our account? So we starting here at $99.50 liquidation value, $9,050 cash. We sold the option for $50. That didn't change. But now the call option expired worthless. So it just gets taken out of our account. We keep the $50. So we'll be back at $10,000 net liquidation value. Our cash value would still be $9,100, and this, of course, assumes that the shares are still trading around $9 per share. If they had gone up a little bit, then we would see our net liquidation value would have gone up with the shares, or gone down a little bit. Our NLV would have gone down a little bit more with the shares. Okay, so a little bit more interesting is what happens after assignment. So the shares would be called away, right? And we're going to do the same thing that we looked at with the put options. We're going to look at this just before the shares are called away. And that simplifies all of the math. So we don't have to get into any extrinsic option value or market makers playing with the option values just, in the minutes before close. We're just going to go ahead and say what the full intrinsic value of the option would be here. So in this example, just before being called away, we say, okay, we starting off again, $99.50 liquidation value, $9,050 cash. We sold the option for $50. None of that changed. But now we have a share value change. And I'm going to record it here as a share value change where we were saying before the share value was $9. Now we're going to say that it's moved up to $10.75. And so because in this starting value, we have the $900 kind of baked into this $99.50 value, I'm just gonna record the change in the share price here from $9 to $10.75. So we have $175 appreciation of the shares. And then we have the call value. Now, if the shares are trading at $10.75, just before the call option expires, it should have a value of 75 cents or $75. So we're gonna record that as minus $75 here. Okay, so if we were to close it before, we'd have to pay $75 to close it. We'd be losing $25 on the trade, but we're making $175 on stock. So all in all, we would probably be okay with that as long as the stock holds that value and we're not actually losing money. It's kind of a break even because we have the shares. The risk in doing that, and people that sell call options sometimes want to exit the trade early, take the loss on the call, and see the stock price continue to go up. The risk in that, of course, is that you close the call option for a loss and then the stock price comes down. And it's because of that risk that I don't typically close call options early. I would let them go for the loss and allow the shares to be called away and then just continue the trade. And we'll get into that more in the next video. Okay, but here we have these adjustments. We're making $175 on the stock. We're losing, or we'd have to pay $75 to close the call option. So our totals now, although we have a net liquidation value of $10,100 and we have a cash of $9,100. Okay, the cash value didn't change. We're just talking about changes in the equities in the account. Okay, so just after assignment, just after the shares are called away, let's look at the changes that happen in the account. Okay, we have our starting value of $99.50 and $90.50 in cash. That didn't change. We have the option that we sold for $50. That didn't change. Okay, now we're gonna say our shares were called away at $1,000 at the $10 price. So we have $1,000 coming into the account in cash. And then the call option was removed. So that $75 goes away. And just like last time with the put option, the call option just goes away. It's removed. We see all of the money comes out in the wash when we look at what the share price was doing. And then here, the last thing that we have to do is remove that $900 in share value that was baked into this $99.50, okay, which leaves us with an NLV of $10,100. And what would we expect? We're all in cash again, so we have cash of $10,100. So on this trade, we kept the $50 of premium from the call option. The stock price appreciated above the $10 strike price. We had a basis of $9. The strike price was $10. We also participated in the upside up to the $10 strike price. So we keep the $100 from the share appreciation. We keep the $50 from the call option that we sold. So we make $150 on this trade, and all of a sudden our account is looking very, very positive. Even though the stock really didn't move around that much, and even though we held through the dip and it came back up, we're actually making more, $25 more than what we would have made by timing the market perfectly, buying the stock at $9 and selling it at $10.75. Okay, that is really the power of selling options. We don't need to time the market. We don't need to worry about these extra things. We'll roll with the stock price by just selling options continuously. Now, there are a couple of other things that we could do after that initial put assignment, right? When we're holding the 100 shares, mentioned those on the past video, and I'll get into the details of another one of those in the next video. So we have the option to sell the shares, dump the shares, and sell another put option. And we may want to do this if, for whatever reason, there's more liquidity on the put side for that particular equity than on the call side, or if we just want the cash in our account, we want the cash in our account to manage through another assignment on another position, for example, then we can dump the shares, sell another put, And in that way, we will still participate in the upside back to that $10 strike price. And we'll go into that example in detail on the next video. Again, I'm Kevin with Tiblio. If you want to get a hold of me, come into the Discord, you can DM me. You can also reach me through the chat on the site, or you can drop your comments in the comment box below. I constantly check for comments and will respond to you. All right, until next time.